Thanks, Ali, and good morning, everyone. Thank you all for joining Resolute's June quarterly production and activities update. I'm joined on this call by Terry Houlihan from our new COO, and Terry's dialing in from Syama as we speak, so it's just after midnight over there. We also have Dave Kelly and Jordan Morrissey who are joining me here in the office. Let me just kick off by providing a few comments on the quarter before handing over to Terry, who can give you all an update on the underlying operating performance for the quarter. And I think it'll also be beneficial for him to give his perspectives on the first couple of months that he's spent at Resolute, and most of those first couple of months, by the way, have been spent on site. So firstly, I'll just touch on the safety performance, and safety has remained very much front and centre, and the performance over the quarter is very consistent with the prior period, which is positive. We're obviously very focused in this area, in particular in the environment that we're operating in at the moment, and it's pleasing to see some of the initiatives that have been put in place by the teams flowing through. So the performance on safety remains positive. From a people perspective, there's some obvious changes that have been made over the course of the quarter and more broadly, probably the last 6 months. The clear ones from a board perspective are that Peter Sullivan resigned after the AGM earlier this quarter, and he was subsequently replaced by Adrian Reynolds. Adrian is a geologist by background and has vast experience in the West African mining scene. In particular, he worked at Randgold at Syama for a period of time, and he'll provide really valuable input from a board perspective. We've also had a number of executive changes which have been noted, and I think the less obvious things that should be factored in are a number of changes which have been made on the sites. We have appointed a number of key technical people into roles at sites, as I said, over this last quarter, but also after the last 6 months. And we're starting to see those people find their feet and become acclimatised to our Resolute operations, which is really very important. One of our keys is to make sure we have the right people in our operations, which is obviously a very obvious statement, but not quite as straightforward when you're operating in the sort of COVID-ravaged world that we're operating in at the moment. So we continue to look for some key technical people, both at site and in our head office, and we're very confident that we'll fill that complement quite shortly. As we just turn to the operations, I think one really important thing that we should mention is that the partnership that we entered into at both Syama and also Mako with the governments in those respective locations, from a vaccination perspective of COVID, was fantastic. I think, to be able to have got through over 1,000 of our employees and contractors and had them vaccinated just provides stability and operational resilience to our workforce. So I think it's been a fantastic rollout of the vaccines in Senegal and in Mali. As we look at the operations and we look at the numbers, there's no doubt it was a mixed bag in the June quarter. There's no shying away from the fact that from a gold production perspective, it was below our expectations. And those expectations from a production perspective obviously flow through into the cost impacts and all-in sustaining costs. So the major component of the increase in our all-in sustaining cost is the lower production levels. So it's very much a denominator effect. As we look at our overall costs, then the overall costs in quantum are pretty much in line with our expectations. However, it is, I think, important to remember that we had some some pretty positive results through the quarter, in particular when you look at Syama. We had the highest levels of performance that we've experienced from a mining perspective, a processing perspective, and also the roaster throughput. So that's really pleasing. And we also, from an oxide perspective, had the highest level of material processed through the oxide plant also. So, there's a few key positives that we can take away from that. We've just got to ultimately get the gold out of the back end of all of that, but we are making some headway on some of those other those key issues that ultimately drive gold production. Must touch on Mako, of course. Mako just keeps on ticking away and is running very much in line with guidance and very much in line with our expectations. So the team at Mako continue to do a really good job on that front. Also important to note that we've largely completed the power station. That's working well. We did have some disruptions to power during the course of the quarter as we made commissioning or as we commissioned that power station. But that's all operating very well now, so we should expect to see some positive benefits both from a fuel usage and environmental and cost perspective. So that's a high level. Terry, why don't I hand over to you now just to speak through some of the operations and your thoughts on things, and then I can come back and touch on a few of the more corporate type activities before going into a Q&A.
Okay, thanks, Stuart. Thanks for the introduction. My name's Terry Houlihan. I've been with the company exactly 73 days, and as Stuart mentioned, so far I'm on day 45 on site. Given that I'm based in Europe, that has made it very, very easy for me to fly in and out. And with my card with the vaccines on, I'm not subjected to quarantines either side. So it's made it very easy for me to spend a lot of time with the people here. Naturally, given I've only been here for a short while, I'm still in the fact-finding mode. I'm getting my fingernails dirty, climbing inside mills, having a good look at the roasters, underground, etc. And what I'm trying to do right now is not only learning the detail of the process, but also trying to support the site teams. As Stuart mentioned, we've got some new people here. There's been quite a large turnover of staff here over the last 2 years. And we're trying to identify all the priorities for essentially the systematic improvements over the next couple of years. We've also identified 1 or 2 gaps in the teams. As Stuart mentioned, not only in Perth, but on the sites here. So we will be bringing in some more engineers. We're looking for people at the top of the game, and these will complement the teams we've got. We think we've got some very good, strong people now in positions. And as I say, it's all really to settle the high turnover that we've had over the last 2 years, difficult times. In terms of Syama, as Stuart mentioned, the major project enhancement over the last 2 years has been the commissioning of the 30-megawatt power station. It has caused a few commissioning issues, but we're virtually there now. The 3 10-megawatt units are performing well. The battery backup, the 10-megawatt lithium battery backup is not quite at full power yet. That's not critical, but we've got punch list items and we're systematically working through those as we speak. So that should reduce significantly our power costs going forward. We'll be using the cheaper and more efficient marine oil instead of diesel, and that should have significant impacts on reducing our costs going forward. I think we move to the Syama sulfide operation. You've got the numbers in front of you, I'm sure. The Syama sulfide, the underground operation, as Stuart said, we've had some record numbers there. It's continued to perform with the tonnages. If we remember that we started this in 19, we processed 1.6 million tons, produced 63,000 ounces. In 2020, we got it up to 2 million tons, which was nominal nameplate of the plant, processing plant, produced 124. And with the half year, if you analyze that, we're running at a rate of about 2.2. It's a 10% step up in tonnage. So nominal 140,000 rate. However, we're not expecting the full 140 because we're doing some key maintenance towards the end of this year in Q4 for our roaster. There's some major steps that we're doing on the roaster there, we're also taking the time to do some further enhancements to that plant. So when it comes back online, we'll be able to go at a faster rate through the plant and probably with a bit more efficiency in terms of recovery. So naturally, with running the higher tonnages both underground and in the plants, that's highlighted several bottlenecks, and we're also looking at enhancing all these, not only on the roaster shut, but going forward over the next couple of years. The underground mine development itself is ahead of target, and that's made the transition to full owner-operator over this last month very smooth. And again, that will have a significant impact now that we are full owner-operator of that mine with lower costs going forward. It also meant that a lot of people, specifically a lot of expats, about 40 expats have moved off-site now. We did handpick the best people there, the drillers and the best people. We've got about, I think it was 95% of the people we wanted to move across to the mine have all moved across, very happy, and they're settling in now. On the underground now, we have over 80 draw points, so now we can start being a little bit more flexible on tonnage and grades, because it does vary across the ore body a little bit, and reorganizing stockpiles so we can actually manage the feed to the plant a lot better, put medium-grade materials on stockpiles, and hold those until we have debottlenecked the plants over the next couple of years to be able to put it in there. We think we've made some big strides there, and obviously we're going to continue all these enhancements we talk about over H2 to further increase tons and recoveries as we go forward. We are putting a little bit more instrumentation into the processing plant. We are putting gold analyzers on the streams, directly linked to some of the operators of putting flotation cleaners in to upgrade the material, and this will be able to present a better and more consistent material to the roaster going forward after the shut in Q4. If we look at the Syama oxide plant, the tonnage-wise, if you remember a couple of years ago, we were starting to say that we were probably running out of oxides, but the geologists have found more material for us. So over the last 3 years, we've done 19 and 20, 1.4 million tons each, and then at this point in time this year, we're at 1.5 million tons annualized. However, grade has been a problem. We have mentioned it, the cashew pit. That's been a bit disappointing, mostly because of the orientation of the ore body has brought in a lot more dilution than we originally expected. So over the last 3 months, we have swung forward to our Tabakoroni deposit. It took us quite a bit of time to gear up with all the equipment, and our grades so far low at 1.43. The Tabakoroni coming in should get us back to 2. On average, we want it to be at 1.65 for the year. We're not sure. We don't think we're going to be quite there at 1.65, although we're starting to make progress as we speak. And that's why we've, as Stuart will mention, we've lowered our guidance a little bit on the material coming out of there. As a result of what we found with the cashew pit, we have changed our philosophy. We have switched to having 2 to 3 pits ready at all times instead of 1 at a time, and that is in terms of equipment and grade control. And again, it's to give us that flexibility. So if there's a problem with ground control or with the ramp failures or even grades and dilution, we can swing to other pits while we sort it out. In terms of Mako, as Stuart mentioned, it's going well. We've almost finished the cutback and it's gone exceptionally well. Again, if you look at it, that has been ticking over 19, 20 and 21. We're at 2 to 2.1 million tons going through the plant. That is all a function of the hardness of the rock. As we all know, it's a particularly hard basalt material. And based on the grade, we did have higher grade materials in the top of the material at 2.9 originally. It's come down last year to 2.6. And this year, we're actually running at 2.2, which is slightly higher than our original thinking of 2 grams a ton. So we think we're going to produce a couple of thousand ounces more this year, than just slightly more than the original budget. As part of the upgrades that we're looking at, the enhancements onto the milling circuit, we are installing mill optimizer equipment, and this will improve the productivity of that mill going forward. We also did inspect the mill in June. After 4 years of operation, I can personally tell you, having been inside there, it is in excellent condition, despite this tough basalt that it has been treating for the last 4 years. So what we're doing now at Mako, it's all a units game now. It's looking at where can we make the wins. The mill has been continuously operating at 6.9 megawatts, and that is the bottleneck. It does, however, have an installed power of 8 megawatts. So we're looking at what are the bottleneck areas around that plant to actually step that mill up over time. And naturally, it is the ancillary equipment around it. It's samplers, it's conveyor belts, it's bits and pieces. But the mission is over the next few months and year to get that systematically up higher, and get more power into the mill and increase that throughput. Because with the grades coming down to the expected 2s, to get more units there, obviously that's going to be our main drive. So if you look at life of mine, we don't see any major changes to life of mine going forward. We're looking right now immediately for consolidation. We've got several enhancement projects on the go. We need to settle those in, and that's where we're thinking we need 1 or 2 more extra people to assist with commissioning. We have got people lined up already to come in, and they will be parachuted in very soon. And if you look at the future, as I say, the exploration guy, Stuart will cover that in a bit more detail, but there is some excitement, we believe, coming down the track, both for sulfides at Syama and for oxides at both sites. So we think we're going to be here for quite some time, and we think we'll certainly get the returns out of the expansions that we're looking at over the next couple of years. That is my, Stuart, that is my statement at this point. If you want to add anything further to that, or I'll hand back to you.
No, great. Thanks, Terry. Good summary, and I'm sure there'll be some questions as we just touch on a few of these corporate matters. So look, why don't I just run through a couple of these points before getting into some Q&A. Let's touch on Bibiani. As we all know, the Bibiani process with Chifeng was wrapped up. We have had a number of approaches from different parties in relation to Bibiani, and we're continuing to work through a process on that. So you'll appreciate that until we conclude that process one way or another, I really can't provide too much more information on that front. As Terry touched on, from an exploration front, we continue to be very focused on near mine exploration activities, and we're seeing some really positive indicators that are flowing through, particularly around Tabakoroni underground. We're also seeing some positivity on the oxide front at Syama, and we're also getting some. Terry, you might just go on mute, mate. We are seeing some good. We're making some good progress. At Mako around extensions of our exploration area to obviously extend the mine life there. Turning to the balance sheet and cash flow, we've got our usual cash flow graph that sits in the quarterly presentation on page 6. Really a couple of things to pull away from this. We finished the quarter with $89 million worth of cash and bullion. The bullion number was up higher than what it was in the prior quarter, and that was simply a reflection of the timing of some of our pours. We're certainly not holding any bullion. As soon as we get it, we sell it, or very close to that time. So that's not something that it's just a timing thing. And that's obviously has an impact on the operating cash flow bar, which is typically higher than that number. The other thing to point out is that we did make a voluntary debt repayment of $20 million on our revolving credit facility during the course of the quarter. So that's the first step in our de-gearing approach. But ultimately, $89 million worth of cash and bullion. We had gross debt of 309 million after taking that 20 off, which ultimately resulted in net debt of $280 million, which was $3 million lower than the previous quarter. We haven't made good enough inroads into that, but that's largely, obviously, on the production side of things, which we have spoken about. We continue to work through our tax position in Mali, and we continue to have discussions there. I wish I had more to update the call on and the shareholders on at this stage. We still are in discussions, and I guess that's to be expected given the political back and forth that's been occurring in Mali over recent times. We do continue to offset our royalties against VAT, so that is giving us a degree of respite on that front. We have our hedging table in there, so we continue to improve our overall hedging position. The average price which we received for gold over the quarter was a little over $1,700 an ounce. That reflects a few of our older hedges that were in place that are well and truly out of the money, forward contracts that are well and truly out of the money. We have a couple of those remaining over the next few months, but you can then see what we're doing from a hedging perspective and the price of those hedges. We're also taking some euro hedges out. That's a little bit of a natural hedge. The West African franc, the CFA, is tied to the euro, so where the opportunity exists, we'll put some euro hedges in place, and that gives us that natural hedge position, which I think makes sense. So then just turning to guidance, as we look at guidance, obviously we have changed and lowered our production guidance and increased our cost guidance. That's broadly reflective of the first half's performance. So we spent a lot of time looking at all of our options to see how we might catch up the shortfall in the first half production. It's really tough this second half. We've got the roaster shut down and obviously the transition from an oxide perspective to Tabakoroni, and as Terry said, we're completing the cutback at Mako. So those opportunities in the second half of this year are really quite limited. So that's ultimately got us to a position where we've reduced our guidance to between 315 to 340,000 ounces for the year, at an all-in sustaining cost of between $1,290 and $1,365 per ounce. So look, we'll continue to look at opportunities. We need to do a bit more stripping as well, so that's also factored into those guidance numbers. But we're setting ourselves up, I think, for a more positive 2022 on that front. So Ari, I think with that, I might hand back to you for the Q&A.
Thank you. If you'd like to ask a question, please press star, then 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star, then 2. And if you're on a speakerphone, please pick up the handset to ask your question. Our first question is from Reg Spencer of Canaccord Genuity. Please go ahead.
Thank you. Morning, Stu and team. I was going to ask you about that lower gold sales number, but you seem to have covered that off on the timing of those gold pours. A question on, I guess, an outlook from an outlook perspective at Syama sulfides. Recoveries are still sort of sub-80. Given the consistency and the apparent stability of the roaster and the plant throughout the June Q, are those lower recoveries that you had in that quarter just a reflection of the lower grade? And is 80% still an achievable target in the medium to longer term?
Yeah, thanks, Reg. Look, certainly from a bullion perspective, hopefully that's obvious from that graph that as you look at it, just a timing thing. So no issues on that front. As we look at the recoveries, still our target to be at 80%. Yes, you're right to a degree. We had the lower grades are reflected in the recovery amounts, and we also had a few other sort of, I guess, despite the good throughput, we had a few other issues that, from a mechanical perspective, that just took a few percentage points off our recoveries. That's a mechanical process. It's something we have to sort out and fix. We don't want it to happen again. But that's the situation. Terry, I don't know if you had anything to add on the recoveries.
I just add that, the first thing, we had higher throughput, and as a metallurgist, you'd climb in there and say, well, if you've got higher throughput, are you getting a worse grind? Now, what we've determined, we know that the recovery is not sensitive to grind too much as long as it's at a certain plateau level. But what does have an impact is the residence time. And we've also we're looking very closely at the agitation systems in the tanks, and we're looking at the oxygen sparging systems in the tanks. We're also looking at the on-stream analyzer. So we think there's, with a couple of issues there, we think we can fix relatively quickly being sort of 3 to 9 months. But we think the longer term, yes, the 80% is on. We can achieve that in the laboratory. We just got to demonstrate it on the plant. And these are the sort of the quick wins that we think we can systematically work on as a group of metallurgists in the plant.
Great, thank you. And just with the mill downtime, last quarter, you did have some disruption by lack of critical spares and bits and pieces. Was the extended downtime that you experienced this quarter just a reflection of being able to make up that lost time and just get things right, as you point out, in the mill? And then how is that separate to the extended downtime that you're talking about in Q4? I guess, am I splitting the mill between the roaster here with respect to those maintenance shuts?
Yeah, I think you are, Reg. The mill downtime we just had an overrun on a scheduled maintenance of the mill at Syama. So that extended for a longer period of time than what we would have liked. Full schedule, but just a delay in getting it up and running. So that was one point. I guess, we did have some critical spare issues. There was probably a little bit of a hangover effect from some of that flowed into the quarter. But we've certainly looked at those critical spares and been through a whole audit process, and we're in a better place in relation to all of that. And obviously the roaster, it's a 36-day shutdown in October, November this year. So that's something different.
Okay. Last question is the oxides. So are you able to tell me when you expect to be back into Tabakoroni in earnest? You mentioned that you've got to balance out equipment availability and supply across the various oxide ore sources there. So when can we expect you to be getting the benefit of the grades at Taba?
Yeah, we're in there now, Reg. So largely it was the pre-stripping and stripping activities that occurred for the majority of the quarter, and we just got into some more there towards the end of the quarter. But broadly, the majority of the ore now is coming from Tabakoroni. There's still a little bit out of Cashew, and then we're also at some stage later towards the quarter, we'll be moving further up north towards A21, and that's that multi-pit oxide strategy that Terry mentioned, which is important for us because it just gives us that flexibility.
Are there any material benefits to cost for that lower trucking distance as you move back further north, or it's a little bit by the by?
Oh, look, I mean, obviously you're talking about from A21, I think it's about an 8-kilometre trip down to the processing plant, whereas from Tabakoroni it's 32 kilometres or something like that. So obviously it costs you more in transportation to move material from the south to Tabakoroni, but it's not significant in the general scheme of things.
Understood. Thank you, guys. Appreciate it. I'll pass it on.
Thanks, Reg.
Our next question is from Adam Baker of Global Mining Research. Please go ahead.
Hey, Stu and team. Good morning. Just a couple of follow-up questions to Reg there.
Just on Tabakoroni, display pit there, just wondering, how long the mine life is expected there and, what sort of grades you're getting out of there.
Yeah, g'day, Adam. The Tab display, Tab display was, remember the main pit there was mined last year. So this is sort of an extension to the north. So we've got Tab display and Tab Gap, which are both extensions to the original Tab mining area. So these are something that we're probably expecting to be around for 12 months, a little bit longer than that maybe. And we're looking at grades from there, in the high ones to the low 2 grams per tonne is what I'd say. From that. So that's our expectation for that. And that's very much around that overall strategy of wanting to make sure that we capture all of the upside benefit that we can get from the oxide legacy at Syama. So, obviously, most of that's been mined out now and very successfully at the Tabakoroni main pit. But we have identified and we have talked about for a little while the satellite pits and the satellite operations that we have dotted throughout the sort of 80 kilometres of Syama proper. So what we want to do is get into those satellite areas and capture the benefit of that oxide while we've got the oxide plant there before we get into Tabakoroni underground and the capital spend there. So the important thing for us really is to make sure that we don't leave any of these little oxide satellites unmined over the next little period of time. The drill results and the drilling activity that's being undertaken is positive on that front. So each time we have a little chat about that, it looks like we're just extending the lifetime of our oxide satellite strategy, if that makes sense.
Yeah, sure. That makes sense. Thanks for that. And then just secondly on Syama underground, just the past few quarters, it's kind of been trending down, reasonably significantly below reserve grade. I'm just wondering, expecting that to continue that way, or obviously now you've got up to 80 draw points, you can be a bit more selective in what you take. But I think you mentioned that you're going to review the resource there. Just wondering what we can expect there, on the grade front in the near term. And maybe, if you could, give us some colour on, what you're looking at in the resource. Thanks.
Yeah, thanks, Ab. So it's fair to say that the grades, as you look at it, and quite rightly point out, are below that reserve level. We, as we're mining through there at the moment, we are, I guess, reaching a more mature level of the sub-level cave process. And I think probably what we're seeing, which is not entirely unexpected, is an element of dilution that's flowing through. We're still working through some of those things. But the reality of the situation is, as we open up more of those draw points, we get much more flexibility through the process. So I think the cave is maturing. We're maturing in the way that we mine. We're not seeing anything untoward at all, logical perspective, that's concerning for the longer term grades or life of that ore body. So it's very much still our expectation that we will be around that 2.7, 2.8 grade over the life of that mine. So I'm not seeing any concerns around that. We are just a little bit lower at the moment, but the expectation is that we'll be back into it, or we'll be into it shortly.
Great, fantastic. I'll leave it there. Thanks, guys.
Thank you. A reminder to ask a question, please press star then 1. Our next question is from Andrew Bauer of Macquarie. Please go ahead.
Yeah, it's Stu and team. I just jumped on late, so you may have already answered this, but just after an update on the strike actions in Mali, is that sort of all washed through now, or is there still a few issues on site? Cheers.
No, mate, that's all washed through. So the workforce there is all very positive. I think Mohamed Sissé Dr. Abazidi have done a great job in terms of the way that they've managed the workforce, and in particular some of the community activities that have been done. So we're pleased with the way that that's all gone. Political situation in Mali, of course, continues to evolve, and we have seen, if you like, the second coup that occurred through there during the quarter. I guess with those more macro political themes, you do have the potential for industrial relations activities or striking activities as part of the political process, but we haven't seen any impacts of that certainly through the June quarter. And as I said, the workforce seems to be happy and content.
No worries, that's all from me. Thanks, guys.
Thanks, mate.
Thank you.
Okay, Ari.
No further questions at this time. Back to you, Mr. Gale. Thank you.
Great. Thanks very much, Ari, and thank you all for joining the call today. As we see, we have a number of areas that we're seeing improvement in. We have a number of opportunities and projects that we're working on, which we think will lead to improved performance over the longer term. We're working very hard on getting those projects up and running because it is recognised at the end of the day, it's all about gold production for Resolute. Gold production to generate cash flows, to deal with the balance sheet and pay down our debt. And of course, then that gives us further options. So our focus is very much around that. The near-term focus, get the right people, put our systems and processes in place that enable us to focus on production. So that's what's key for us. Thanks, Terry, for your analysis and contribution. Off to bed now before the next call. And if you have any further questions, don't hesitate to reach out. Thanks, Ari.